Hey everyone, this is Dan with Data Trend. Today is Friday, April 1st, 2016. It's about 2:30 p.m. or so, the Mountain Time. The market's closed a half hour ago. We are looking at a daily chart of the S&P 500, the SPX index, and the market closed up yet again today. End of the day here at 2072.78 was up 13 points or 0.63%. And this rally that we've seen up from down around the 1810 level just continues. And so we've talked a lot on the lower time frames about how the pattern of higher highs and higher lows just continues to chug along. And for the time being, that's what we see is we just see continuation. The size of this move is getting really pretty big here and fairly significant. So it seems as though the market should want to slow down and stop, but for the time being, we really haven't seen anything to indicate that it wants to do that. Even the shakeout that we saw earlier this morning, that the market came down here and it traded all the way down towards, I guess, 2043 or so. Um, this really didn't violate any key levels on the downside, and so there still wasn't reason to even expect that it would find continuation. And the market turned around from there and just headed higher to end the day up here on the highs, and just slightly above this high from, I guess it would be Wednesday or so. So on the upside here, it does seem like the market has the potential to get in the short term up to this 2082 level that corresponds to this high from back in December of 2015. And in doing so, it'll essentially have reversed this entire move from January. I mean, it's essentially already reversed it anyway, but it would put it up there to 2082. And if we were to get a little bit beyond that, the next area we might start to look at is somewhere in the neighborhood of maybe 2095 up to 2100 or so, and that corresponds to these prior highs. And that's sort of a range, and that 2100 again represents an even number, and so the market's sort of drawn to even numbers, and people think about even numbers a lot, and so they tend to place orders around those levels. And so it's not uncommon for the market to kind of gravitate towards them and trade to them as it gets relatively close to those levels. I'm not predicting that the market will get there, but I'm just saying it's something to be aware of when we're getting this close to those levels. I'd say getting up and above this 2082-ish level to 2085, and it would give us reason to wonder if we weren't going to see 2100 sometime in the near future. Even though it may seem completely unreasonable and totally irrational, certainly the market can do whatever it wants, and at all times it does do whatever it wants. So let's go ahead and drop down to the 65-minute time frame. So this is the 65-minute time frame, and what we can see here is that the market just continues to make a pattern of higher highs and higher lows. On this chart, I've driven in a lot of these support levels, and in many cases, these support levels are prior resistance levels. So the market comes up, it finds resistance, it pushes through, finds support. From that support level, it makes new highs. And then what we see is that those new highs are turning into support as the market continues to rally. And so this morning you can see these six candles here represent the trading action today. So this morning we had this big push down, but we really didn't even come down and violate any key levels of support. Really, we just came down into a prior support level down around that 2040-ish area, and we didn't even get anywhere more significant, like 2028, 2020. And from there, the market wasn't able to move lower. Essentially, the sellers weren't aggressive enough. And from there, it just started to drift higher and then continued to push higher throughout the day. And that took us up and above the highs from Wednesday, I think it was, when Yellen came out and made her announcement. So for the time being, we just have to expect that the market wants to continue higher and trade accordingly. Certainly, the market could also kind of move somewhat sideways in here, and it is kind of moving a little bit more sideways. We're seeing, not quite as much of an advance, but for the time being, the bias is still generally, sideways to bullish in here. And, the market continues to find support at up and above this rising 5-day simple moving average and also the 10-day simple moving average. And until we see that change and until we see some of these support levels being violated on the downside, then we just don't have any reason to expect that we're going to see anything different. Once some of these levels start to get violated, I'm not saying that they will, but if they were to start getting violated, say this 2040 level broke, we might see the market trade down here to 2027 to the 2020s, the low 2020s. And if that happened, then we might have reason to say, okay, maybe there's going to be a little bit deeper pullback or a little bit more weakness in the short term. But for the time being, we just don't see anything like that taking place. Even these intraday pullbacks that we have and even these multi-day pullbacks are finding some support at somewhat key levels. This pulled back here to find support at prior resistance, and from there the market just turned higher. So for the time being, we're giving the benefit of the doubt to the upside, or at least sideways at best. I did go ahead and adjust the April 5 CIB today. and the blue lines here represent the new expiration break-evens for the position. A couple of days ago, I removed the lowest butterfly, and that was back on Wednesday, I believe. I'd have to go look at the orders for sure, but it was on Wednesday or Thursday, and I took off the lowest butterfly, and that gave us a new upside expiration break-even in the neighborhood of, say, 2065-ish, and I don't have that on the chart, but that's right about here where my cursor is, around 2065. And my thinking at that time is I just wanted to see that the market really wanted to kind of hold these levels and hold up and above this 2057, which is this prior high, and it did. When we had that pullback earlier this morning, I was still in the single butterfly, and I thought, okay, well, maybe we're going to pull back a little bit deeper. That didn't happen, and so when the market traded back up higher, then I decided that it was time to add to the position. So we put on the second butterfly on the upside, and this is the resulting position. The new expiration break even is right up here. It's around in the neighborhood of 2082 or so, and that corresponds roughly with this prior high from December. And on the downside, it's somewhere around 2000-ish. Is the lower expiration break even. So for your reference, we got into this trade back here on March 14th, and the market at that time was trading around 2016 or so, I think was the approximate level. And from there, it's just been kind of a general trend higher, and we're up a couple percent from where we got into the trade, and not a big deal. We are getting somewhat close to expiration. We'll go ahead and just take a look at the position. We are getting somewhat close to expiration, and so my hope is that we're going to be out of this trade sometime next week. You can see here we have 28 days to go. And the position I added today, so you can see that there are two butterflies, and there are actually two SPY calls as well. The trade I added today was the 1995, 2050, 2055, 2105 butterfly. And with that, I added the 206 April 5 SPY call. And the prices and the trade history is all listed in the spreadsheets for the trade out on the blog thetatrend.com, so you can find that and dig up the exact prices. But essentially, what this is a second butterfly that was 55 points wide, and I just split the short strike. And the reason I split the short strike is that we're getting kind of closer to expiration. 28 days to go, and so as a result, these butterflies are relatively short delta, or they're more short delta than they would be earlier in the trade. And so we did that just to kind of flatten out the T+0 line and try to prevent a little bit of pain if the market does continue higher. So we ended the day here at 2072.78. The delta on the position is negative 10.66. The gamma is negative 0.08. There's about $24 in theta. The vega is negative 79.26. And the open loss is negative $33 or so. So we're still in okay shape. We've swung back to a small loss, given the size of the move, but we're okay, and the trade is going to start to decay extremely quickly. So if we were to take this, and we'll just go ahead and day step out to Tuesday, say, so if we just go out, I think I went too far Tuesday. I went 2 Tuesdays. So we'll go out 1 Tuesday. You can see that the T+0 line starts to shoot forward relatively quickly, and we start to have room to work. Probably around the neighborhood of 2085-ish is we're going to be thinking about adjusting the position again. And again, that corresponds to that prior high also. That prior high is somewhere in the neighborhood of the low 2080s or so. So if the market came up to there, tagged it, and turned around, we probably wouldn't do anything to this trade. But for the time being, that's how the position is sitting. My hope is that sometime next week, say if we day step this out to Thursday or so, we'll find ourselves in a position where possibly we can get out of the trade. These expiration slices are set to 1.2% higher and then 3% lower. If the market does trade lower sometime next week, we should have a relatively easy time getting out of the position. If the market trades higher next week, we're going to have a harder time, or we're going to have to continue to move the trade higher and continue the chase on the upside. So, we don't know what's going to happen. Certainly the market's extended in here, but we can't say that it will definitely pull back, or that it should pull back, or for that matter, that it's even giving us any signs that it wants to pull back. The other position I have open is the June 1st broken wing butterfly, and I just realized today that I didn't have that trade listed on the results spreadsheet on thetatrend.com, so I went ahead and put that in there today so you can see the exact order specifics. The upper expiration break even for that position is around 2037, and the lower is down around 1950 or so. We got into that trade, I'm not sure exactly, sometime last week. I think we've been in it for about a week or so, so we probably got into it somewhere down in here. And the market's just moved higher, and that's okay. It's really not going to be till kind of up and above this 2080 level that there's reason to be too concerned. We'll go ahead and take a look at that position actually right now. So this is the SPX June 1 Broken Wing Butterfly. This trade was entered for a 235 debit. The market at that time was trading probably in the low 2040s or so, something like that. With the close here today up around 2072, the delta is negative 1.64, gamma is negative 0.01, theta is about $3, vega is negative 1950, and the trade's just trading around break even. On the downside, the market can really move all the way down to 1940 or so, so we have plenty of room here on the downside for the market to move. If we do get an open next week that's higher and trade up and above about that 2080 level or so, what I'm going to be doing is closing this position and rolling it up to closer to at the money. And I'll be positioning the upper long closer to at the money at that time. But if we do see the market start to trade lower next week, in the early part of the week, I am either going to add another butterfly to this position or I'm not going to do anything depending on the price action. But for the time being, the trade's pretty healthy. It's just kind of sitting here. There's not much to say at this point in the trade. This guy has 63 days to expiration right now, so it has quite a ways to go. But at any rate, that's all I have for today. I hope you have a great weekend. If you have any questions, feel free to shoot me an email, info@thetatrend.com, and thanks for watching.